Welcome, everyone. Our guest is an AMarkets partner from Kyiv, an expert in international financial markets, Michel Ritcher. Hello, Michel. It's good to see you.
Hello, Tim, and greetings to your viewers. First of all, I'd like to wish you all well. Big earnings and all the best.
What a great way to start our conversation on such an optimistic note. Well, let's not waste our time. I know that you are a true professional, so my first question is probably obvious. How did you get into trading and in the financial industry in general? Where did you start? Why did you decide to work in this industry?
Well, it was back in early 2005. As you know, I live in Ukraine. After the Soviet Union collapsed and Ukraine became independent, the so-called privatization of state enterprises began. Everyone who was eligible got the right to receive their share of the state's property and could dispose of it as they liked. At the time, I was already old enough to own part of the shares too. In 2005, the shares of some companies skyrocketed, and by surprise, I earned good money from this growth. That's when I first realized that I probably need to devote some time to studying the financial markets. I began to improve my knowledge, engage in finance, and decided to make a career in the financial industry. I got a job at the Ukrainian Stock Exchange in 2005-2008. Which was the period of extreme growth of the stock market. Ukronafta, UNAF, stocks rose from 75 hryvnia to 950 hryvnia per share. So I thought that it was high time to try and profit from such volatility.
Almost like Bitcoin hype, right?
Exactly. It was the same as the Bitcoin boom. We saw crazy growth until the financial crisis hit us, of course. It's already the fifth crisis in the past 10 years.
Yes, exactly.
So most of my income came from the stock market, but I traded in the foreign exchange market too. In Ukraine, we mostly traded hryvnia against other currencies because it was extremely volatile. From what I see now with current volatility amid the coronavirus outbreak, this is about the same as it was in 2008. You could make a very decent profit back in the day. The euro, for example, could rise to its annual highs in a matter of 3 weeks. With sufficient skills and knowledge of the market, such volatility offered excellent trading opportunities. You could earn good money. Everyone thinks, well, the crisis is over now. No more opportunities. No, this is just the beginning.
You're a programmer. You've got a degree in programming, right? Does your education help you in your work?
I actually have 3 degrees that I got here in Ukraine. I also took a bunch of training courses abroad, including Stanford and MIT. But I wouldn't say that I chose to work in the financial markets just because I studied to be a programmer or an economist. Yes, I have a degree in economics and in engineering. I'd say it's 50-50. On the one hand, having this knowledge did help me to understand the theory better, to get a grasp of what's going on in the financial markets and how they work, how the whole world works. But then, everything is up to you, how you apply your knowledge in practice. It all depends on your personal analytical skills, your experience, and I would even say your gut, i.e., how well you can assess and predict what's happening in the market.
Exactly.
Sure, having programming skills does help a lot. 90% of all trading is now automated. Most of the work is done by trading robots, which allows me to save time to run my other businesses or simply to rest. Besides, since my strategy is automated, there is no human factor. So I can't be like, well, oil has dropped, so I'm going to buy some. I can't make this decision, but I have a trading robot that can. It makes all the decisions for me.
Yeah, but this robot is still tailored to your trading system, and perhaps even written by you, isn't it?
Well, yes, it is. The trading robots that we use are designed and tailored to my trading strategy and the strategies of my team. I personally didn't create this robot. Writing an algorithm is a very complicated and time-consuming process. We have a smart and highly skilled programmer who does it for us. He creates, customizes, tests, and adjusts all our robots. We have a robot that works well in a flat market and a robot specifically for the trending market. And we spell out the risk too. Some make a good profit, some lose. But there's one thing that you have to understand here. Any robot is a certain trading strategy that works in a certain period of time. You'd need to use a neural network. Well, it's not that we don't have the skills, we do. I'd say neural networks haven't fully reached 4x yet. It would take years of hard work to build a really good trading robot that will constantly adapt to all market conditions.
Michael, as far as I understand, you are in Kyiv now, right?
Yes, I'm in Kyiv.
Could you please tell us about the economic situation? How are things with the industry in general? What's the attitude to trading in the current tough realities?
Well, lockdowns and quarantine restrictions are in place all over the world, and Ukraine is not an exception. It would seem that the economy should suffer. It should be a difficult time for everyone. But people are very resilient creatures, and they adapt to any crisis pretty quickly. At first, many companies suffered losses, but as time passes, people start to adapt to a new normal and look for new sources of income. New businesses appear. Existing businesses have to adapt to new realities too. Speaking about me personally, we adapted a long time ago, back in 2011, 2012. So we're doing okay under the current crisis conditions. We've been working like that for the past 8 years, so to say. So I couldn't really tell the difference work-wise when quarantine measures were imposed. But in general, yes, people began to look for new sources of income, to discover new opportunities to make money online. They switched to remote work and freelance projects. Trading and working in financial markets, especially investing, became popular in new conditions. The spread of coronavirus crashed the U.S. stock market, since most indices dropped. You can now buy stocks of really good companies at a fairly cheap price and make a decent profit in the long term. So now there is a really great demand for this industry and sector. As for the Ukrainian economy, I think there is no point in discussing it now. This is more, let's say, a long-term process that will keep developing. What will happen next? If we just take hryvnia and its exchange rate, that's what social media users seem to be most interested in. Then, in my opinion, the hryvnia will strengthen. Why? Before quarantine restrictions were introduced, we saw a great surge in cash demand. For some reason, as soon as crisis strikes, people in Ukraine rush to buy dollars, since dollars are the most reliable currency. But the dollars should not be in the bank account. Otherwise, there will be a default. You should keep your dollars in cash. Now the situation. International borders are closed. Air traffic was dealt a massive blow by the pandemic. Cash, both dollars and euros, is normally delivered by air. That is, money is literally transported and is safe to Ukraine. Huge money bags. And this is the case everywhere, actually. To get cash, people run to exchange offices and to banks, but there is no money in banks and exchange offices. The exchange rate jumps to 29.1. Just so you understand, earlier, a month ago, the rate was 24 to 25. Now it jumped to 29 to 30. Well, 30 to 30. 30 hryvnia is a psychological mark. If it rises over 30, then we are already catching it somewhere around 40. So against this backdrop, the exchange rate jumped very sharply. These were purely emotional purchases. For obvious reasons, banks also joined this whole trading frenzy in an attempt to make more money. The spreads increased. The bank was selling, or rather buying currencies at 27.7, selling at 29.3. It was a highly profitable period. After that, the exchange rate more or less stabilized, and now it's holding around 27 mark. And it'll probably stay in this area, maybe it'll even strengthen.
So you think the worst is behind us?
After the quarantine restrictions are lifted, if we receive additional money from the IMF, it will only support the hryvnia strengthening. So yes, the worst is over. Now, many have adapted to live in this uncertainty. I expect only the improvement of the situation from now on.
Listen, these projections you've just made about the hryvnia and its strengthening prospects, people will definitely thank you and leave their comments to this video, especially those who haven't bought foreign currency yet and want to jump on the bandwagon.
Yes, well, let's hope that hryvnia does strengthen.
Michael, we have quite a few traders from Ukraine. I mean, as a broker, we have a lot of clients from Ukraine. So I would like to ask you, why did you decide to choose us as your partner?
That's a very good question. There's such a word, connection. Humans are wired for connection. Favorable trading conditions, bonuses, stable and reliable order execution, speedy deposit and withdrawal. These are standard services any broker should provide. We've been working with you since 2013. That's when we first met. And even back then, you could always contact customer support and the technical support department, and they would do their best to solve your issue or answer your question. We all want to feel heard, especially when we need help. At AMarkets, you can talk directly with customer support specialists and other partners and investors. I think that building personal connections is extremely important. Getting past the formalities, making it real, authentic connections and relationships. It's the best thing.
Well, thank you very much. I really appreciate the feedback. I know that you are a managing partner and a speaker at, let's call it, Ritcher and Partners Online Trading School. Being a lecturer and working with a large number of students, can you just lay it on the line and tell us if they really meet your expectations? Do they achieve the goals they set before getting acquainted with the financial markets before they met you?
Look, let me first tell you how and why we decided to create our online trading school. It's actually more of an online trading academy now. We're gradually growing. So when we first started this project, we decided to do market research and find out how the financial market in Ukraine is doing. What we saw is that there wasn't much room for investment. There were only government bonds and all sorts of unreliable, hyped startups. And also, there was trading in the foreign exchange market. So, in terms of making a profit, there were two options: investment and trading. Everything else was bullshit. Just some shady money-making schemes. And what is the most interesting, people bought it. Even despite the fact that there was a 90% chance that they would lose money. Everyone just got into this business, so we decided to do things differently. We began to offer free educational and training materials to support financial literacy, so that people could understand basic terms and concepts. Starting from the concept of money itself and then teaching them how to trade Forex, invest in U.S. and Ukrainian securities, and how to build their financial well-being. This is where we started. In the last 3 months alone, I've recorded over 150 free training videos. You can find them all on YouTube. I made several videos every day. My goal was to cover the topic of trading and investment and provide complete information. So many traders started asking me for individual consultations and personal training. I can't take too many students as I don't have much free time, but I always take 3 to 5 people and work with them. I don't want to brag, but all my students whom I teach personally, they all make money. 100% of them earn. They either make money in the foreign exchange market, in the stock, or in the cryptocurrency market. It depends on what they prefer more and which sector they understand better. And yes, there are traders who switch to investing, and they no longer trade. They find investing more suitable. They invest in S&P 500 or NASDAQ, for example, and wait for it to grow and make money out of it. Some novice traders couldn't continue their training for personal reasons. Some had to move on. We conduct our training courses in 27 countries. We did the math just recently. So yeah, we cover 27 countries. Over 21,000 traders have completed our training courses, either paid or free. 900 of which were paid courses, both group or private lessons. I'm not the only lecturer and teacher. We have curators, my former students, who took up teaching as their career. Answering your question, if they live up to my expectations. Yes, I'm pretty much satisfied. It's actually very exciting to get thank you messages or read comments to our videos when people write something like, "This is the best video I've ever seen," or "Thank you for sharing this insightful and useful information." It's just so encouraging and motivating, you know? It makes you want to keep working and developing this industry.
Okay, I see. Now that we've figured it out with your students, can you teach us how to make money, Michael? So you teach them and they start making money. But what are your goals? What goals do you personally set? To earn too?
Well, I wanted to go to bed earlier than 3 a.m. Yesterday, I went to bed at 2, so here the first goal is accomplished. As for other goals, apart from trading, which, by the way, doesn't take up too much of my time, just 1.5 to 2 hours a day, I would like to devote more time to personal growth and self-education. I also manage the assets investors trust me with. And the more money I get under management, the greater the responsibility. It's not just clicking your mouse, buy here, sell there, and make some money. Each investor has their own needs and their own goals. And when you start doing business with investors, you want to meet their expectations. And not only to meet, but to exceed. I always strive to do a bit more, for the result to be better than an investor expects. And it takes more time. If we move away from trading and investing to my personal goals, then no matter how trivial and common sense it may sound, you should always try to be better than you were yesterday. I learn something new every day. Every day I study the industries and spheres I thought I wouldn't be interested in before. Let's take history lessons. When I studied at school and they taught us history, I was like, why should I learn this? Why do I have to learn about all these historical figures and memorize all these dates? Where can I possibly apply this knowledge in real life? Now, I'm reading about different models of government and political systems, how everything evolved, and it really has become so interesting for me. When I travel around the world, I start wondering how it all began. Who invented all these things? How the countries in the world developed? The same with trading. I am constantly learning and improving my skills both in trading and programming. At the moment, we are exploring the topic of machine learning for trading. We are adapting some of our trading robots. And all this takes time, special skills, and experience.
You're talking about algorithmic trading, right?
Yes, this is algorithmic trading. Analyzing behavioral models of market participants, what their moods are, what they're buying and when. We're even trying to analyze search queries for different companies in order to understand what mood the investors were in when they bought a particular asset. Understanding these behavioral models is the future of asset management and trading. Technical analysis alone won't be enough. You have to understand the fundamental background in investors' moods, their sentiment. Let's take an example. Say there's a company and its stock should cost $500 per share, and it costs $70. These $500 expectations are based on the fundamental calculations, but the price is $70. The question is why? But the whole market is selling. The money is pulled out of the market, so the stock prices fall. But it's a great opportunity to go long, invest in these shares and shares of other companies and make decent money. What's good about trading is that you can not only buy and keep these shares, you can sell them and earn money too.
I agree. There is such an approach when you evaluate the interests of a particular company, and then you can assume whether it has an interesting future in terms of growth, and so on. Very often, this approach is used to assess a specific situation with Bitcoin, for example. In terms of fundamental analysis, Bitcoin's future growth or decline is predicated precisely by the amount of market interest towards this crypto asset at the specific moment. You've mentioned that you look at the fundamental indicators and results of individual companies, and based on them, you make a decision whether it is overvalued or undervalued. I'm personally a proponent of the classic Buffett school. So I compare the value of the company's net assets with its current capitalization. And again, I approach the current crisis from the position that now we have a very good opportunity to notice the moment when the company's capitalization falls below the net asset worth. These are the securities you need to look for now. As for the fact that everyone is in isolation now, I think that Ukraine is not an exception. Lockdowns are indeed a widespread problem. I agree with you. I can assume that due to social isolation, people are looking for ways to educate themselves. So interest in all kinds of training courses, including your academy, grows. Perhaps you can confirm it too. The interest in the online courses that you and your partners offer has also increased, right? And I would like you to share your point of view. Do you agree that behind these huge price movements that we now observe in many financial assets, vast opportunities are hidden? Now is the golden time when the financial market and all its segments are really in demand. And this is exactly what you need to pay attention to. Do you agree?
Totally. I support this idea. And even when the crisis was just beginning, I always told everyone, a crisis is not a problem. A crisis is an opportunity. And those who can see this opportunity and benefit from it will soon join the Forbes list. I mean that now is the time when new leaders of the Forbes list are emerging, and they will become billionaires in some 5 to 10 years. These are the people who will find their business niche, find their niche in finance, and start making money. This is all happening right now, so we need to use this time and these opportunities.
To sum up, we should think of what's happening now not as tough times, but as real opportunities to seize.
Exactly.
I agree with you, Michael. Look, I know that your YouTube channel is called The Conscious Investor. What do you mean by that?
This is actually what I started with. This channel is about market analysis and financial literacy. Unfortunately, many people don't understand how to invest. And even if they invest randomly, being like, "Oh cool, oil has dropped, let's buy it." Or, "Look, the airline stocks fell, let's buy those too." They think these are strategically important companies. They will be definitely bought out. There's this kind of approach based on an assumption that if an asset fails, it means that it has to go back up in price later. Although this strategy sometimes works, there are also some securities that dropped in price and will never rise again. If you don't approach your investment process from the position of fundamental and macroeconomic analysis, you'll have no understanding and awareness of your actions whatsoever. I have a patented strategy called blind level. You close your eyes, draw the line, and the level works out. The main thing is to close your eyes, because otherwise it won't work. By the way, I showed it in my live streams. It works perfectly, especially on history. I don't know how it works in the future, but it works out perfectly on history. A conscious investor is when you understand what is happening in the market now, and you can at least give it a logical explanation. It's when you understand the fundamental indicators. If we trade currencies, you are aware of the macroeconomics of each individual company. If we trade stocks, you know the fundamental indicators of this stock and why it's going to rise. And only then you use technical analysis, take risks, and start making money. I've been doing open mic for 11 weeks now. I opened a separate account with AMarkets and grew it from $5,000 to $8,500. This is in 11 weeks. And from the very first day, I've been explaining each of my transactions, why I entered the market, why now, how much we'll earn, how much we'll lose. And it's all on record, fully documented. So when you have a clear understanding of your actions, you will earn both in financial markets and in any business you are engaged in. Because trading is a business, and people need to take it seriously as a business, not a hobby.
Listen, with all your workload, do you have enough free time for your family and friends?
Not always, to be honest. Let me explain why. When I traded independently with my own money, I traveled around the world. I had enough money and time for everyone. Now I manage several funds in Ukraine, manage the assets of private investors, and trade on my own. It all takes a lot of time. When you trade just with your own money, this is one approach. When you have investor funds under management, even if it's a relatively small amount, it's still a responsibility. And when you have six-figure investments to manage, it's an entirely different approach. When people invest that kind of money, they expect an individual, personalized approach, and you cannot screw up. Another thing is that I manage several public funds. You can see the whole history, and everything is audited. I am constantly asked, "Can you show us your statement?" Guys, I do not have a statement, because I submit audit reports for each individual fund. Here, I can show you the audit report. Unfortunately, I can only get the statement from the account I am currently trading on. All my public funds are audited annually, so you can see them almost in real time on the website. As for private investors, I can't show their statements. This is confidential information. I'm sure that if you were my investor, you wouldn't want me to reveal how much money you make and how much you have in your account. So there is more responsibility for me now. The workload is greater, so I can't always devote as much time to my family as I'd like. But weekends are sacred time. I spend them with my loved ones. Once every 2 or 3 months, we try to travel somewhere for the weekend. Especially if it's a long weekend, 3 days or so. We try not to stay in the country. We enjoy traveling abroad. I hope that the borders open in the near future. Air traffic resumes and everything returns to normal so that we can travel again and enjoy our family time together.
You've touched upon an important topic of asset management. When you work with large investments, even if you use versatile tools and perform various types of analysis, technical, fundamental, analysis of market crowd, you name it, there's still a chance that something goes wrong and your trade fails. How do you handle such situations? How do you cope with anxiety that your trade has gone in the wrong direction? Especially if there's a drawdown in your account. Especially if it's investors' funds, not your own.
It's risk management. I found out about it firsthand back in 2008, then in 2011, then in 2014, and now in 2020. Well, in 2020, I was already prepared. The first thing is that all transactions are carried out within the risk limits. The second moment is that with investor accounts, we make only average to long-term trades. So, this is not the case when you enter a trade for 3 days and then exit it. We're talking about more long-term investments with prearranged risks. We even designed an algorithmic system that analyzes the risk-reward ratio and select the assets that will be suitable for a particular investor in such a way that we don't exceed the drawdown, and a person can handle it psychologically. As for me, for the last 3 weeks, I've been working not as a financial advisor and asset manager, but rather as a psychologist. Investors call me being like, "Hey, so what's going on? What are we doing? The markets fell. I see that we have a small drawdown. Can we get out of it? What are your predictions for the near future? What should I do with my business?" And so every morning I answer all these requests. Calm down. Everything is good. We'll be all right. And it's like that almost every day until the market starts to finally recover. Just recently, stock indices went up. We even got the encouraging news that early results from clinical trials have raised hopes for an effective coronavirus vaccine, which means that mass vaccination may begin sometime soon. This news will be driving markets' recovery. Today, the indices have already added 3 to 5%. So the market is already recovering and investors feel relieved. Even I sometimes have this feeling of anxiety that something will go wrong, that something won't work out. Although we don't just open all our trades with a stop loss, we also hedge them in different proportions and ratios in order to secure a part of the profit if the market plummets. And this strategy works. We've tested it. Everything is great. But still, there is this feeling of unease that makes you wake up in the morning and double-check everything. And there is no getting away from it. This is the job of a trader, the job of an asset manager. If a trader says that he has steel nerves, he is not a trader. Most likely, he never really traded.
This feeling of anxiety is probably another characteristic of any conscious trader who is well aware that everything that is happening at the moment, it can change. Special thanks to you for your optimism. It's true, we now observe a trend, perhaps even a turning point. The stock market is rising, and the U.S. stock market is ahead of the rest. It sets the mood for others and keeps this general positive sentiment. Well, we look a little ahead, not a few days, but a few weeks ahead. Can we assume that what we see now is the end of tough times we had to face because of the pandemic? Or maybe there can be another relapse that could send S&P 500 to the levels we saw some 2 weeks ago. What do you think?
I would like to continue on a positive note, but let me slightly shift our focus. Let's try to figure out why this recovery actually took place. First of all, it was driven by the news. This is understandable. But there is also support from central banks. Altogether, they have poured more than $10 trillion of liquidity into the market. And I think it's not over yet. This is the first moment. The second thing. They offered cheap money. I mean, they lowered interest rates. And one more thing. The market was already prepared for the current situation. So, it wasn't this huge black swan event that no one had been expecting. Yes, the coronavirus. It kind of spurred this whole movement and the markets crashed. But in fact, if we look at the fundamental data, most of the world's macroeconomics, including the US, China, Europe, and Britain, the production over the past 6 months has been catastrophically declining. Production growth rates are negative. There's this joke. Is your economy growing? Yes, it's growing steadily, but with a negative value. This is what's been going on in the world recently. So it could have been possible to prepare for this. But after the Fed began its unprecedented quantitative easing, injecting liquidity, the markets began to hope for a recovery. But China did everything in a completely different way, especially if we look at China's industrial production growth rates for the last 10 years.
Well, yeah, I get it.
It shows 6% annually, and this is a lot. And here you have minus 13.5% in just 1 month. The question arises, how? Is the coronavirus to blame? Most likely the answer is no. The reason might be some kind of internal debt that had to be written off somehow. But this is just a theory, of course. We will never know for sure.
So you think they managed to resolve this problem by pouring money, right?
Yes, and against this backdrop, everything was bought out. As history shows, after such an event, a V-shaped recovery usually occurs. In my opinion, this is not the case now. There won't be any V-shaped recovery now. 100%. We won't recover that quickly. No matter what others may say, there's no way we can recover after a 32% drop in just a month. I just don't believe in it. Especially now when May is coming, sell in May and go away. And this is actually what we can expect in the near future. And therefore, in order to remain on a positive note, yes, there will be a decline, but it will be an opportunity to buy again. On the second bottom, it'll be our gift.
I will share your opinion on this. So we shouldn't get excited ahead of time. Everything is possible, and the crisis is pretty serious. In fact, when I do my research and prepare my analytical reviews, I repeatedly emphasize that this crisis is not just an ordinary crisis, which normally comes once every 7 to 8 years. This is, perhaps, a crisis that will surpass all the other crises that happened in the past. If we take a look at separate indicators and at the state of the economies, the industrial sector, services, construction sector, labor market, all of them indicate that things have never been so bad. You and I, we are both unanimous in our opinion that there are now vast opportunities for making a profit in the financial market, and we need to take advantage of it. Could you give the most concise and comprehensive advice from your experience to novice traders and investors? For those who are only getting acquainted with the financial markets.
First, think. Be that conscious trader. Don't just enter the market because something excited you. Study macroeconomics. Study the fundamentals, and you will become much more aware of what is happening in the world. The second tip is risks. Manage your risks. Do not chase huge profits, trading what you don't understand, taking huge risks. Make money. That's why we're all here, to earn. So, to recap, be conscious and manage your risks. You won't change your psyche and personality. We are all human beings. We all worry and get anxious. But if you force yourself to strictly observe risk management rules, to learn the economic basics and what's going on in the world, it will be much easier for you to trade and earn money in the financial markets.
Thank you, Michael. Let me remind you, our dear viewers, that today we talked with Michel Ritcher, financial markets expert, trader, and asset manager. Michael, thank you so much for this fascinating and insightful conversation.
Well, thank you for having me. I hope to see you again. I wish all of our viewers successful earnings. Keep looking for more profit-making opportunities during this crisis and make money.
That's right. Thanks.
Thanks.